fund. I think it's a discussion that has elicited a lot of reactions. And question number one, for example, for someone who already owns a house, what are you contributing to? That's question number one. And number two, I believe the discretion to own a house should be on each person. And then you see, I think the big concern is, number one, if implemented, then it will come with that issue of reduced incomes, because remember, it will be deducted by the employer. But you see, what is not clear is how this will be implemented and the benefit that will be derived. I know after, basically what the proposals are is that after a certain duration of time, then you can be able to get the money back. But then you see, the question is, the way these funds have operated, what will be the accountability of this cash? But you see, I think at the end of the day, the discretion really should rest with an individual as to whether they want to participate in the fund or not. I believe it shouldn't be a mandatory ask. I think for any Kenyan who feels it is a need, then they can take up that fund contribution. But then there still needs to be regulations that clearly spell out what it will take for basically to join the fund, and what will be the reward at the end of it all. Because then this should not be sort of a forced agenda, yet people have, as individuals, have different priorities when it comes to matters, but it's a very specific matter on housing. So yes, it is a noble cause, but then I still feel the discretion should rest with the individual. It's a good thing, yes, but what will be the modalities or operation, and what is the benefit? That I think needs to come out clearly, but also followed with accountability of these funds, because I think we know what happens with the issues with NSSF, NHIF contributions. It's all about accountability. Even something like the proposed increase in the NHIF rates is actually a noble cause. But then what is the sufficiency with this additional contribution? What is the benefit that you will get, or each Kenyan will get as a result? So I think we don't want an implementation of a contribution or a fund that is beneficial, but then we still grapple with the same issues of you still cannot get access to proper health care, or it's not defined what benefit you'll get from the housing fund. So I think the intention is noble, but the modalities and clarity on what each stands to benefit should be spelled out and should be properly regulated. Good question. And you see, we keep having, every budget cycle, we keep looking at it, I think, in the wrong way, because we start from the end coming back and work downwards. So we know the budget is 3.6 trillion. So the question is, we want X number of revenue from tax, say 2 trillion. Then there are the other sources, whether it's from lending or borrowers and stuff. But then remember, the 2 trillion, for example, that we would be talking about is only coming from a meager 3.5 million individuals and corporate bodies that are actively paying some form of tax. Now, these 3.5 million people are supposed to raise enough tax revenue for the entire population. You can actually see the mismatch, and that's where the problem is. Now, the discussion on widening the tax net has always existed. If you look at any budget, the proposals are always targeted at already existing businesses, increasing taxes on the same businesses that are within the already compliant taxpayers. So I think that's where the problem starts. In this budget cycle, the proposal basically, for example, to introduce a digital asset tax, the proposal to tax content creators is an attempt to widen. Number one, it does not mean that content creators, or if you dispose a digital asset and you're earning income from Kenya, you are not supposed to pay tax. Any person doing business in Kenya should pay tax, not unless you are exempt, specifically exempt, and the law is very clear on exemption. So it is a process. I don't think it will be an overnight thing where the tax base will just wake up with the click of a finger and say we have increased or we have doubled the tax net. There was something that was introduced a while back in the form of a 15% on single business license fees, if you recall. And you see, that to me was a step in the right direction, because there are so many. Actually, the county government has a proper repository of all businesses of any nature, whether it's an individual, a small business, or a big business, whatever it is. And you see, also to speak to the sentiments my colleague Kevin alluded to, what is the role of information technology, and the fact that I emphasized, I still believe the systems or the processes to pay tax in Kenya are very complicated. And even with the eTIMS rollout, the question is this: for you to raise that eTIMS invoice, you need a system. Now, if you walk through Nairobi or any other town for that matter, there are so many businesses that are running. So what will it take to properly roll out eTIMS to make sure that every person, whether you are VAT registered, you are a small business, your turnover is less than 5 million, how will they efficiently manage to get all these people to come together and basically account for taxes? So I believe there are strategies. Having lower rates for things like turnover tax are things to encourage to come in. Having amnesties are ways to encourage people to start complying, knowing that you will not be penalized for your past sins. The issue of the government coordinating the various government agencies, the county government is there. They can get all the data they need. It does not have to be an excessive tax. It does not have to be the 15% that they previously introduced, because that was too high. It can even be a 5%. I believe that will actually propel, because we need to increase that number from the 3 or so million who pay tax. You can actually see that number is too small.
You see, VAT is a consumption tax that affects so many products, and the incidence is on almost everyone. There are so many products we use that when you buy, you are paying plus VAT. Now, in so many jurisdictions, VAT is the number one tax collection for many governments. Unlike in our country, where VAT is lagging behind corporation income taxes and payroll taxes, PAYE. So, when we ensure that there is full compliance of the VAT laws in terms of VAT declarations and the claimability of any input VAT, we would see an increase in the level of compliance to VAT, and subsequently an increase in the VAT collections. Much, maybe I would tend to be a bit forward-looking, to the extent that we have a 3.6 trillion budget, which will be financed largely through tax collections. So what does the government need to do to ensure that the proposed collection measures that have been implemented are able to meet the 3.6 trillion budgetary collection? So I think from the first point is that it's a high time the government does a full rollout of technology to assist in tax collection and tax compliance. By this we mean that things to do like VAT. VAT is lagging behind other taxes like corporation tax and pay as you earn. So it's a high time that the government looks into adoption of technology and maybe new models like the AI, artificial intelligence, to assist in the collection of certain taxes like VAT. VAT has an impact on almost every person because it's a consumption tax. So we expect VAT collections to be even on top of all other taxes. But current scenario is that VAT is trailing other taxes like corporation tax and pay as you earn. So if the government can do a full rollout of technology, there is a proposal to introduce eTIMS on electronic tax invoice management on all invoices that are raised by organization. So that would assist in a full rollout of technology in the area of administration of tax invoices, and at the same time enhance compliance of VAT. Another issue that needs to be looked at, I know it has got a lot of controversy, and like my colleague has mentioned, there has been a school of thought that when you lower the taxes or the tax rate, you tend to enhance the tax compliance status. Now, to that end, there is a proposal to lower the income, the monthly rental income tax, or the tax on rental income from 10% to 7.5%. Now, I think in the same breath, the government can look at lowering even the corporation tax rate from the current rate of 30%, maybe like Rwanda has done it, to 28%, 25%, and in that breath, you tend to bring more people into the tax bracket and you enhance levels of compliance, because when the tax rates are very high, more people tend to shy away or to run away from compliance. The same thing we have seen about the introduction of a digital asset tax and a new withholding tax on digital content creators or influencers. I think it's a high time the government rethinks about, do we need such high tax rates which would discourage people from compliance, or can we lower the tax rate a bit to ensure that the tax jurisdiction or the tax laws remain friendly and encourage more people into the tax bracket? I think those are some of the few issues we need to look at going forward to ensure that the government meets its budgetary projections.